oversubscribed by hundreds of times or maybe thousands of times when the company had primarily nothing but only 12 people on its payroll and almost non-existent top line. But probably they used a lot of influencers and created a buzz in the market in such a way that everybody had a FOMO. Akash, first question comes to you. What do you think drives the popularity of financial influencers compared to more traditional sources like financial advisors or institutional reports?
Yeah, that's an interesting question. And you know why? Because this is quite relatable to me. Right now, my daughter just went into college to do her computer science first year. And she has also joined a course in stock market. She has actually hooked into a lot of influencers. She's looking at the information. She's gathering tips, information from there. And she is talking to me about this. So that made me curious about that why people are getting so influenced. And here are a few things that come to my mind. First, it's the accessibility. I think everybody, like on this call, everywhere, everybody has on their handphones social media platforms. You can very easily get to YouTube or Instagram, look for a free content available for 20 seconds to 20 minutes of video as the time permits, right? So it's quite accessible and easy. Yeah, another factor I believe is the reliability that happens because these influencers, they come as like people like you and me, everyday people. They share their stories of success, failure. That makes it quite relatable for people. And also they democratize the information, which means once the information is put, it's a two-way channel. People ask questions, they comment on it. So again, that makes quite relatable with people. Also, it's quite seen that the advisors it's perceived that may have a vested interest in what they are saying, while the influencers come as very independent people. One other thing I think that hits Gen Z also is the real-time content. These influencers look at market trends, they quickly react to it, and that becomes quite appealing for people to look at the real-time information and act on it. So yeah, I think they are quite popular, especially I would say with Gen Z, and they are driving a lot of attention and traction to stock market.
You're right, Akash. I think you made some wonderful, points. So one thing, I feel is the financial influencers, being in the new age, they are good in making up good stories and make it, more entertaining, which are then more relatable to people. The reliability or trust factor is still, somewhere, which weighs. But they make it very, very interesting. And since they make it very interesting, they become more popular, no doubt, on that part. Kaustubh, coming to you, there is always this question of influencer being rightly qualified. So how important it is for financial influencers to have formal financial qualification? Can experience and self-education is considered enough?
Yeah, it's a very relevant questions in the current context. If you go to any social media, I think you will get a lot of financial influencer and they keep on talking about a lot of things. And if you really go into their experience or into their qualification, there are many influencers who are quite successful. And the reason for their success is basically their real world experience. So basically they might have done similar activities, or they have made some kind of a fundraising or investment which they can share with audiences. But I think the success for the people, I mean, who are actually not qualified but still they are quite successful as an influencer, is their content creation skill. I mean, the content the viewer wants to know or content the viewer wants to listen, so they hit onto it, and their presentation skill are really, really commendable. But if you really ask me that, okay, whether the influencer should have the qualification or not, so I will say like that. So if the influencer having the qualification, so then it is significantly enhance the credibility, trust, and authority on this financial space. So first of all, when I talk about the credibility, I mean, if the influencer having a formal qualification, so then as a viewer, I mean, it becomes more credible, whatever he or she is talking about, it comes with more trust. Then being a qualified person, so he is always having the industry knowledge, because the person might have spent quite a long time in the industry, maybe as a part of the curriculum or as a kind of a professional. He or she has spent a long time, so that industry knowledge he can kind of take it during its influencing session. Then, of course, in India, there is no regulation as such, but some countries also having some regulation that what you can talk or what you cannot talk. And I think being a qualified, the person should know those regulations. And finally comes the market networking or professional networking, because generally, if you are a qualified CA or CFA or any other professional qualification, so by default, it comes with a professional networking. So you can also borrow a lot of thoughts or a lot of knowledge, and or I will say the best practices in the industry into your influencing session. So overall, if I really ask me, I will say that it is definitely as of now not very important that the person have this qualification. But when it comes to a very complex advice or a kind of a where there is a high value kind of stake is involved, then the qualification of the influencer is quite important. And I think it is the viewer or the receiver of the information really need to see the qualification to see how much they can kind of trust on those advices. So yes, so for generic things, I think it is more important how the influencer is influencing. So their presentation skill, their experience matters. But when it comes to a very complicated or high value stake, then it's very important the influencer having the proper qualification.
Yes, Costa, but what happens is becomes very, very difficult to really draw a line, because that line is very thin. We have seen last couple of years the kind of money people have lost on options and trading, and
Right.
the regulator had to then make it very, very strict regulations around that. So therefore, in my view, primarily formal qualification is absolutely necessary, coupled with experience. Because only based on the experience, there could be a poor advice, or, more importantly, one size fits all kind of, information or solution, which may not work.
Yeah. So that's what I said. When it comes to complex financial or high value stakes is involved, I mean, that qualification really matters. But if you really see nowadays, people even require a lot of, I mean, for us, for in India, I mean, the people have a lot of option to invest. Okay, so it is not only the future and all options, this kind of complex thing, but they have a lot of, I mean, they even know a lot of products as well, right? So maybe those simple things can be done by the people who don't have much of qualification, but when it comes to a complex thing or a level of thing, so then of course qualification definitely I will say it's a mandatory thing.
Yes. Vijay, coming to you, and so of late we have seen last few years the markets have been pretty volatile. So to what extent do financial influencers contribute themselves to market volatility, particularly in niche areas or emerging asset classes like cryptos or penny stocks?
Joinder, we cannot eliminate the influence of social media playing around all our life, all part of our life. And market cannot be eliminated or called as separate. And I would say this is the unregulated force in the market. While market itself is like a highly regulated, especially stock market, but this is a force which is highly unregulated. The volatility is an important point. I will say, especially small stocks or cryptocurrency where liquidity itself is a question, the effect, the financial effect will be like beyond its weight. So this is one aspect. Similarly, there is a point of pump and dump risk. The investor, first of all, he is not regulated. So what he is advising and advocating, which sometimes can be like he is having special interest in that. And then it's like a market heading. So wherein the bandwagon effect, the more importantly, we can remember the recent market development in terms of Hindenburg, the first series, second series. So these are all, I would say, the good and bad. But there are good impacts also. But I am coming from more from that bad side of the influence.
Yeah, I think you made some pertinent points, especially about market herding and pump and dump kind of thing. I have also seen in some cases, like a few months ago, there was an IPO, for a car, agency only, which was oversubscribed by hundreds of times or maybe thousands of times, when the company had primarily nothing but only 12 people on its payroll and almost non-existent, top line. But probably, they used a lot of influencers and created a buzz in the market in such a way that everybody had a FOMO, towards this. So that is one major risk, which always comes. And then obviously, you talked about market herding that comes into this. Akash, coming back to you on trust and accountability, are two very important aspects of this. So with the influence, that these people wield, should financial influencers be held accountable for the outcomes their followers face on a result of following their advice? How can that accountability be enforced?
Okay, so I think that's a tough one, because there's when you draw a line between education and advice, I think answer is between a balanced approach, which means that influencers should be allowed to share their opinions, but at the same time, if that is turning into an actionable financial advice, then there has to be accountability. There are few things that come on top of my mind when we look at how this accountability can be enforced. First is disclosures. I think disclosures is very important. If an influencer is sharing a particular content, then he should be clear about that. If there is a conflict of interest he has, is it a paid promotion? Is it the stock, the product they're talking about, is it something where they have their own investment? So that disclosure comes as a very important thing, so that person listening can understand that there is some interest and they need to be aware about it. Second thing I feel is about how they can be made accountable is around regulation and licensing. If the influencers are getting into area where it is really a financial advice, then they should be subject to similar kind of regulation licensing as there is for financial advisors. And I think if I relate some of these two, like I watch some of the business news channels, when I look at that, the panelists that they come in there, they talk about their view on a particular stock or something, they're always upfront disclose that they have investment in this, or they are sponsored by the same group or not. So that's very important. That should apply to influencers also. The last thing, I think, some way to cover to that, but there should be a legal recourse to it, which means that if the individual or investor is actually getting influenced by a poor advice that is coming and there's a loss being suffered, then there has to be an option of legal recourse against that person. Now, having said all that, how this accountability can be brought in, I think there is one important point, that how the investors or individuals can become more financially literate. If you look at if I look at our education system also today, we study general science, social science, languages, but I think if you look at our schooling, there's no financial literacy there. It only comes into play when you get to some specific, you take up specific stream, then only you get to know this. But I think that's very important, so that there are informed followers and they do less like blindly trust on these influencers. So that's my take on this.
So Akash, you made some very pertinent points, and you talked about financial literacy as a very important point, even from the schooling. I think like any other subject, financial literacy could be very useful for that matter, and also some regulatory aspects of how can they be licensed and things like that, and more disclosures. And when we talk about disclosures, Kaustav, there is always that conflict of interest, which comes in place. So how can followers be made more aware of the financial and potential conflict of interest, such as paid promotions, that these financial influencers may have? Should there be more transparency in that regard?
Yes, absolutely. I mean, as Akash said, that there should be more transparency. So whenever any influencer is talking about something, he or she has to fully disclose his or her interest into this opinion. And I think another important thing is also the credibility of the influencer and the qualification of the influencer. So if there is a qualified, the influencer having a professional qualification, then the credibility increases. So I think these are the two things, I mean, as a viewer or as a receiver of information, always need to count. Another very important thing, I think the people need to think about it, how the influencer is presenting the fact. Does he or she presenting or kind of promoting something, I mean, something very specific without a backup or something, or he or she kind of promoting some, or I will say very specific class of product. Okay, so in that class, there might be various products offered by different financial institutions or companies, but whether it is very specific to a product or whether it is a class of products, that is also very important.
Absolutely, I agree with you. And Vijay, while we talk about ethics in the financial influence, what ethical responsibilities do financial influencers have, especially when their recommendations can impact the savings or investments of a large audience? Normally these people have very large, followers base, which could be in thousands or lakhs or millions.
It's an important point we should debate in this forum, especially who all are getting influenced. See, all the institutional investors or investors who are masters in the market, they have their own team, professionals to guide and take care of their investors. These are all small, first time or like tiny investors, and they are getting into this kind of an influencer bandwagon. I would say first point we should think about what is the moral responsibility an influencer is actually playing to the market. Instead of actually looking for a quick reward, short-term returns, they should think, first of all, they should know what is the profile, financial literacy of the market and the team they are guiding to. So this is an important point. Based on that, they could influence to say, go for long term than the short term. This is one important point. The next point I would say is harm prevention. Say why somebody is into the market. They are mentally prepared to take a risk, but their mental preparation is not to actually lose the money. They want to go for a next level return, decent return, regulated return. That's where they are in the market. That means, see, at least the influencer got the responsibility to protect the money. Already he is having money. He should not put into a financial distress. So I would refer the reason SEBI directive on the future, etc. I think it's got some like bad influencing reason also. Suddenly SEBI is coming out with a future related regulation. I would really say a kind of ethical code of conduct, because regulating social media is not that easy, but a code or something SEBI can actually put forward to say anybody is having an influence or their words are actually getting weighted in the market will have some kind of code to follow. I think I am highly in favor for something like that.
Yeah, you're right. Till we have any kind of regulatory interference in the matter or regulatory areas to make people accountable, there should be some ethical code of conduct as you talked about. Akash, the social media platforms these days play a very large role. So then should social media platforms make more responsibility, take more responsibility for monitoring the financial advice that is shared on their platforms? or is it a matter of individual due diligence?
Yeah, I mean, my view on that, Joginder, would be it's a shared responsibility. The platforms have to be accountable for actively monitoring the content that is coming there. But at the same time, individuals should proactively perform their due diligence. Platforms can look at bringing safer environment, but users have to still do their due diligence. Now, how the platforms, or let's say why they should be accountable. They should be accountable because they are gatekeepers of that platform, which means that they are aware that the information being talked about there is being extensively used to make financial decisions, which means that is impacting people on a high risk area. Then they should be doing moderation of the content as required and meeting the standards of accuracy and transparency. A lot of co-panelists in Joginder, you talked about regulatory framework, and that's where I'm also keeping a hope that the regulatory frameworks will evolve, and the platform should be aware that uh, they need to take more responsibility, because otherwise they can be subject to some legal challenges or government intervention in future. Now, the other thing is that what I relate to is that there are some existing precedents where these media platforms do this. Let's say in case of hate speech, in case of violent content, in case of health area, they actually are doing that kind of moderation. So in this case, which is a financial advice, which is also a risk prone area, they should have similar kind of actions there. Now, having said that, there is a role of due diligence that lies with the individuals also. And for that, they should make it a habit to make informed decisions. While platforms can flag a bad advice, but still the individuals should take ownership. At the end, it's their money, right? Hard-earned money. They should make do the due diligence of the decisions they are making. And I'll come back to the point of education and awareness. Look, if you learn to earn money, you should learn to protect your money also, or grow your money also. I think it's both. So I think that area of being more financially literate and making informed decisions is very important. So I think both perspectives are important, and my strong view is that there is a shared responsibility.
Yes, Akash, I fully agree with you. And the point that you made on educating, people, I think that is the only way at the end of the day to make sure that whatever advice you're taking the sound advice, you're checking, you're doing some fact check, on that advice. And we all understand that on these kind of platform, regulatory checks are difficult, in current regulatory environment, because most of these are not, within your country. So they're global platforms. So therefore, to that extent, it is difficult. So in that background, the user education becomes very, very important. Kaustubh, coming to you, let's look at it from the global perspective as we talk about, how does this phenomena of financial influences compare across different regions? Are there countries or market where this trend has been particularly beneficial or conversely harmful?
Yeah, I think that's really interesting, and I'm a bit fortunate on that I spent some time in Europe working with one of the MNC, and I have also seen that in Europe also they do have a lot of financial influencer talking about the financial product. But one of the basic difference we really need to understand before we go on to the global part is that the financial literacy among the Indians and the Europeans. So there is a huge gap. So, so in India, if you really see, I mean, in the last 5 years only, there is a trend we are seeing that people are moving from bank FD to different financial instruments. So be it kind of an insurance product or market-driven product. But if you look into the Europe, there is no concept of bank deposits kind of thing. So, and then people are also not believe in kind of depositing. It's a kind of a spend economy. They believe into it, and elderly people are factually kind of dependent on the pension they earn. So the people who are really investing, they are having kind of a surplus fund. Basically, they really need not to depend on that income coming from that surplus fund, and they can they are the real investor, and then they also, I mean, having the basic understanding of the financials thing. So when it comes to the financial influencer out there in Europe or America, or that I will say that developed countries, I mean, it's onto a level. So they are the influencer only talking about the products which are more linked to the market. But if you really look into India, I think India requires a lot of financial guidance or financial literacy to develop among the people. And I will say that still there is a large population in India, especially the elderly population, who having a kind of a corpus which they want to invest and get the money earned, and then they want to live on that. So different people having different objectives, and based on their financial objective, the investment pattern should be. So it cannot be a kind of a generic advice to the people. So I will say, if I really compare the outside of India, the financial influencer role, their role is more restricted to the high-end products, more restricted to some, I will say, the upcoming financial products, cryptocurrencies and all those. Whereas if you really look into India, so then the influencer advice are more linked to the basic part of it. I mean, there are some influencer, definitely they talk about the high ends of product, but if you really see, there are a lot of influencers who also talk about the basic thing. And there is a difference, and probably that's why qualified or influencer are very much important in India. Their disclosure, their transparency, their independency are very much important in India, because if you look into the role of the banking sector or the insurance sector, I mean, they always try to sell the products where they get a better commission. So their advice is really not independent. So we need a lot of kind of advisors or influencers to the generic Indians. And yeah, so that I see that globally, I mean, the influencing subject, I mean, the financial influencer subjects are a bit different. They are more related to the high-end products or the upcoming products for the market. And there is a growing tendency. They believe, I mean, there are a lot of kind of fintech are developing onto it. There is a lot of regulatory environment onto it. Some of the countries have already come up with some regulations onto it. Whereas as far as in India is concerned, I mean, we are still on a kind of a very primitive stage onto it. And our people require financial influences, financial education or literacy on the basic products also, not only the high-end products as well.
Yeah. Vijay, how do you see the future of this financial influencers? So looking forward, what is the role of financial influencers? How is it evolving? And will they become more integrated into the formal financial advisory systems, or will they remain on the fringe of informal advice?
Say, for example, if the formal financial system means it's regulated, then we will say you have to have certain qualifications, you have to have certain check and balances. I would say the moment you bring all those concepts together, then they are no more influence. I would say the word of influencer, because they have to an IFRS financial statement. That IFRS itself is not that go well with the normal people. So the level of analysis and put forward, come forward, then it is no more the level current influence. I would say then it will lose that shine. And I would more lean towards to say, with a code of conduct, which I was actually mentioning in the previous question, they can be, I'm saying they will still in the periphery area, but they are regulated under code of conduct, but not scrutinized that much. So a balancing picture they can play. But rather, I would say, especially in India, the technology and AI, normally, if we look at, we are relatively late in adopting to something, but we are faster in mastering that. So that goes in all aspects of our life. So in this case also, I would say, since anyway influencing is informal and AI is also informal, the only time lag is actually the investing market. That particular population needs to get more understanding of how AI work. And as the mobile, our life is in mobile, I would say the penetration of mobile, internet, and the AI, that can be the future of our influencing, maybe in the longer term. But till that medium range, still the informal influences will play, and someday they will rule also in the market.
So good friends, I think this was a wonderful discussion where we looked at various aspects of the role of financial influencers, whether they are good or bad. We looked at, I think this is very important for us to understand that there is a question of accuracy and reliability and trust of the information that is coming from financial influencers, because they do influence the market, they do influence the decision of an individual where you're playing with the money of somebody else. So therefore, we think the ethics have to come in play, the regulatory oversight has to come in play.